Hey, Eric here from 5minuteinvesting.com. And today we're going to talk about diversification and if you're investing in too many stocks and what is the optimal amount of stock you should be investing. Now, before we start, I always include related videos down in the description below, and I give away free stuff as well. So right now we have a free technical analysis course. So if you're interested in that, remember to sign up there, and you can always check below to see if there's any free stuff. Cool, let's get started. So before I answer this question, it's important to know where I'm coming from. So in the past, I used to invest very frequently. In fact, I would buy and sell every day, 10 times a day. So in a year, I'll be investing like 3,000 times. And I know a lot of people support buying ETFs. A lot of my really smart, really professional friends believes, buying index stocks and so on because the fees are low and you basically follow the market. And if the market goes up, you go up. And if the market goes down, you go down, and so on, instead of picking a handful of great stocks. Now, I just want to address that today, and that's what this video is about. So before we start, I just want to use a quick example. Imagine there's a stock market of 100 stocks. Now, of course, some of them, make a profit of, let's say, 10% a year, and some of them lose 10% a year, and then some of them make 20% a year, some of them have negative 20% a year. Now, if you are an investor and you buy all 100, what would happen? You are going to get exactly the same return as the market. So that is like the index fund, that's like the ETFs, that's anything that is a very, very diversified. You would basically get whatever the return is for the market. So this means if you are so diversified, you can't beat the market. This might be a simplification, but using under this example, if you buy all 100 stocks, there's no way you can beat the market because you bought all of it equally. Now, of course, you can buy a certain sector more, or you can buy like a few stocks, like you can put more weight on it, so then that can skew your return, so then you beat the market by like 3 to 4%. But then if you want to beat the market, and if you want to make a higher return, like the most successful investor like Warren Buffett and so on, like the long-term successful investor, then you got to focus and you got to concentrate, because chances are a golden stock or an amazing stock like Starbucks or Apple or Netflix or Tesla, they're hard to come by. I mean, if you look at the entire stock market, there's 8,000 stocks in, so there are plenty of golden, trending, growing stocks. But they're small compared with the entire population of stocks. That means, let's say out of 8,000, there's only 100. So there's still 100 stocks for you to buy, but then compared with the whole population of the TXS, NYSE, NASDAQ, there's only a small group of stocks that are continuously growing year after year. They have a great business strategy and they're dominating the market. So when you think about it this way, you actually don't need to diversify and you don't need to buy the entire market. Instead, it's your job as an investor to find out where these great stocks are and do your research to make sure they're great, and then you buy them and hold them for the long term. So in a separate video, I actually analyzed Warren Buffett's portfolio. And now you can Google it, Warren Buffett's portfolio right now. You'll notice that he has 80 or so something stocks, but then you know that he puts like 80 to 90% of his money in the top 10 to 20 stocks, because that's called focus investing. And he has a book, which I can probably put a link below as well, called The Warren Buffett Way, which talks about focus investing and how he invests in a few selected stocks that are great. So then it makes money It makes more money year after year, and the stock price continues to go up. And that's exactly how I invest as well, and so far it has been working pretty well for me. So yeah, so you should think about it. If you're over diversifying and you're investing in too many stocks, maybe that's why you're only getting an average return when you're compared to the market. Good luck. Let me know if you have any questions below, and I'll try to answer all of them.